For the Investing News Network, I am Brian McGovern, here with Charles Taerk, the President and CEO of the Faircourt Asset Management. Charles, thank you so much for your time today.
Thanks for having me on.
So we're going to be talking a little bit about cannabis stocks and the cannabis market. Can you first explain your relationship with these stocks?
Sure. So Faircourt began looking and analyzing the cannabis stocks about 2 years ago in May of 2016. And after a lot of due diligence, we launched the first actively managed mutual fund that's focused in the cannabis sector. It's called the 9-Point Alternative Health Fund. So March of 2017 to now, we've got over 18 months of performance. And really what the fund focuses on is certainly the cannabis sector, but we call it an alternative health fund because it encompasses more than simply cannabis. Alternative health is a demographic and societal change. It's global. And it's really encompassing many different demographics. Whether it's a baby boomer or millennials, people want to take a more proactive approach to their healthcare. So they're looking at non-traditional medicines. They're looking at different healthy lifestyles, whether it's eating organics, taking vitamins, minerals, supplements, or it's looking at medicinal marijuana. And so this fund encompasses all those different types of opportunities.
With sort of an early entrance into the market, what are some of the things that you've learned about the cannabis market as a whole?
Sure. Well, there's a lot of work behind the scenes that I think a lot of investors don't appreciate. The scale and scope of the cultivation process and the risks associated with cultivation. These plants are not easy to grow. And despite the fact that the federal government allows people to grow 4 plants each, a lot of people think that that's really easy and I'm just not going to buy from the licensed distributors. But when you're seeing the scale and scope of operations and the plants growing in healthy environments, that's really the key to the early companies is figuring out the right mix of heat, light, water, nutrients, and having a successful cultivation on a regular quarterly basis. There's a lot of magic that goes into that. And so it's not just having a good management team, but it's having people in those facilities with good agricultural and horticultural backgrounds that are really the basis for the value add that then takes place at the extraction and packaging and branding side. So there's a lot of foundational work that goes into these companies.
For sure. Still a lot to know about these companies from the investor perspective.
Yes.
Charles, the long-awaited moment is finally here. Legalization, the moment investors have been waiting for, sort of make a break for these stocks. What's sort of your expectation for the change, like from the public market's perspective?
Well, and I think that's, it's a great question because I think that's a misconception that October 17 is going to be the day. And when we look at the names and we look at the valuations, we tend to view the global opportunity as more significant than the domestic recreational opportunity. And that's, I think, lost sometimes in the media, that we're focusing so much, and rightly so. It's Canada. We're the first G7 country to legalize for recreational purposes. But given the fact that our population is 37 million people, and we take a look at the number of countries that are legalizing for medical purposes, there are now 39 or 40 countries around the world that have some form of legalization for medical purposes. The total addressable market is 1.2 billion people. And when we measure that opportunity in a very short period of time, the next 3 to 5 years, versus the market of Canada, which is 37 million, you then start to appreciate the growth opportunity around the world. Now, it's significant. It has brought a significant amount of awareness to the companies with legalization in Canada. And there will be dramatic changes to revenues, and investors anticipate seeing changes to earnings because up until this point, some of the companies have not been cash flow positive.
Yeah.
So people want to see that turning the corner where the revenues and added earnings start to hit the bottom line. And so there are going to be some winners and some losers, and that's where I think active management is going to be beneficial, because there's a lot of moving parts, and people need to be staying on top of the names.
So Charles, you mentioned that a lot of it has been made about the Canadian legalization, but the actual prize will be that global market. A few of the cannabis names have already risen as leaders, as international leaders, potentially even with ventures, positions in Australia, Germany, Latin America, things like that. Do you foresee those leading cannabis stocks to already be the deciding winners of that race, or can there still be a couple of middle to smaller stocks coming up that could still have place in the international market?
Sure. They've got first mover advantage. The original licensed producers that started in 2013 have the advantage, like a Tilray or a Canopy, Aurora. They've all got global presence, Aphria, CanTrust, Cronos, to name a few. They already have established international distribution, and some of them are working on international cultivation. Canada does have some cost advantages, but other countries have more cost advantages to growing fruits and vegetables, and so they're gearing some of that cultivation towards cannabis. Even though they're first movers, it doesn't mean that they are going to be the hands-down leaders. There are newer companies with new management teams and an ability to raise capital. And so it's up to some of those companies to go to markets where the Canadian incumbents aren't yet. And as we've said, a year ago, there were only 20 countries that had a form of legalization. Now it's close to 40. So that's a doubling in 1 year. And so there's lots of markets to expand to. So just because they're first movers doesn't mean that they will always maintain that. And there's a lot of execution risks still to be played out. And so that's some of the elements that we watch every day.
Moving a little bit more into the stocks in particular with these leaders, these companies that you mentioned are all of them, I believe, on the TSX, and now some of them have also been on the U.S. markets. Tilray has seen a particular rush in its stock, the likes of which we have just not seen before. What's sort of the impact that the U.S. investor is bringing into these stocks as these companies are moving forward into these U.S. markets?
Sure. So having a U.S. listing is proving to be significant. At the beginning of 2018, there was a lot of press with respect to U.S. regulatory issues, and there's a great sensitivity. Cronos Group was the first company to work with the SEC to establish a NASDAQ listing, and that was back in February or March. And what we learned was the SEC was comfortable with maintaining disclosure and other operational issues based on Sarbanes-Oxley. And as long as your plants don't hit the United States, then you are clear to list. And that was a big eye-opener, given the change or the difference between what Jeff Sessions, the Attorney General, was suggesting at the beginning of January. So in 6 to 8 weeks, there was a real change in perception. So Cronos was first, and you immediately saw that American investors like to buy American securities listed on New York or NASDAQ. That's their preference. And although they were witnessing the growth in the Canadian markets, they're less comfortable owning foreign securities. Less comfortable than Canadians owning U.S. securities.
Absolutely.
And so that really triggered a change, and then Canopy Growth went to NYSE, and then Tilray actually did the first IPO on NASDAQ. Tilray is very unique because the recent success of Tilray has brought, it's a double-edged sword, the success. There's a lot of volatility in Tilray, not because they're not a good company. I mean, great management team. They're one of those first mover advantages in terms of global distribution. They are a first mover. They're in more countries than any other licensed producer on 5 continents. And so they're doing lots of good things. But the float on Tilray is only about 20 million shares. And so there are certain days when Tilray gets a significant amount of US media coverage, and then people start buying the stock. And so it's not any fault of Tilray, it's more the media picking up on a story and many investors wanting to get into the sector and really only having three choices. So that's something that you need to pay attention to. You don't really want to be buying stock when it's running like that, because you want to be buying low and selling into that. And so that's, one of the lessons we're learning is you've got to be careful.